Okay guys, so we are here on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week. Okay, let's do the technical analysis here. You see, this is the lower band of the Bollinger Band. This is the median of the Bollinger Band. Market is in between median and the lower band of the Bollinger Band. The market is bearish. Moving averages, market has closed uh, 1, 2, 3 for these 3 consecutive weeks. Okay, below the moving averages, which means the market is bearish. However, again, do not forget that there is a fan out in the moving averages. So whenever there is a fan out, it supports the bull trend. Means this kind of fan out. Okay, so until and unless there is a crossover, see as of now, candles are closing below the moving averages. So yes, it is bearish, and as soon as there is a crossover, then it would be confirmed 100% bearish. Okay, then comes the Ichimoku. Market has closed above Ichimoku, which means the market is bullish through Ichimoku. Then comes some other technical indicators. If you see, this is the MACD. So MACD, the MACD is 50 and the signal is 90. Now last week I told you that there is the meaning of MACD is moving average convergence divergence. Okay, particularly the divergence. So divergence in the price from the moving average. So last week I told you that because now the divergence is increasing, so market will try to correct itself in order to minimize this divergence. So that was one more reason why there was a rebound. Other than that, there was 200-day moving average on the daily chart. Okay. So as of now, MACD means it is giving a bearish direction, but again the divergence it is increasing. Now comes the stock RSI. Stock RSI it is clearly bearish. Then divergence. So divergence in the prices of the candles. Okay, so this is normal as of now, so it is not creating any problem. Then the momentum is now supporting the bears, not the bulls but bears, because momentum is more than 50. Okay, but as of now momentum is not enough to support the bears. So whenever the momentum is more than 90, then only we can say yes, there are very heavy chances it is going to follow that particular trend. So through all of the technical indicators on the weekly chart, it is clear that the market is bearish. Okay, but only through Ichimoku market is bullish. Now let's move on to the daily chart to see how exactly market is going to behave, or market is going to react, on the daily basis, Monday, Tuesday, Wednesday, and so, and what you should do and when you should buy or when you should sell. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Daily chart means one candle represents 1 day, not 1 week, not 1 hour. So on this the daily chart, okay, let me first write down the support and resistances. So this is 4740, 4740. Okay. Then comes 4690, 4690. Then comes 4635, 4635. Then we have 4572 or 4575, you can say 4575. Then we have 4528 or 4527, 4527. Then comes 4460, 4465, 4465. See, there are some intermediate these support and resistances. Okay, but I'm not going to write those support and resistances, because I have mentioned these many times in my previous charts. But these are the important ones which I'm mentioning here. Then comes 4395, 4395, 95. Then comes 4345, 4345. Then we have 4290, 4290. So as of now, let's keep it from 4290 to 4740. Now 4740 is the critical resistance, 4290 is the critical support. As I've told you many times, see 4290 here, and also in the previous months 4290. So I've told you many times this, the 4290. Okay, then again it was here. This is what I'm telling you for almost many months, 7 or 8 months. Sorry, no, this one here, importance of 4290. Okay, anyways, so we are going to keep it from 4290 to 4740. Now comes, yes, so let's first do the technical analysis and then we will deduce the movement of the market. First comes the Bollinger Bands as usual. This is the lower band of the Bollinger Band. This is the median of the Bollinger Band, because the market has closed between the median and the lower band of the Bollinger Band, so market is bearish. Then comes the moving averages. Market has closed just below the moving average, just below the moving average, but it is still above 200-day moving average. Okay, so we must not forget that it is still above 200-day moving average. But as of now, because it is below the moving averages and there is a clear fan out, and this kind of fan out, it supports the bear movement, because we can clearly see a crossover here. So this was the place where this the crossover, okay, it occurred. Because of this crossover, okay, there is a change in the configuration of the moving averages, and this is why through moving averages market is bearish. Then comes the Ichimoku. See, this is the cloud. Okay, market has closed below the cloud, which means the market is bearish. Through all of the indicators, market is bearish. Now if we look into some other technical indicators here, then comes the MACD. Okay, the directional here, if we talk about the directional MACD, it is bullish, because clearly the MACD is more than the signal. Okay, but secondly, if we talk about the divergence, so divergence is minimal. Then comes the stock RSI. Stock RSI is marginally bearish. It is just marginally bearish. It is not bearish, but it is just marginally bearish, because the K channel is 82 and the D channel is 85. It is just marginally bearish, because see, both K and D channel are above 50, which means they are in the bullish zone. Okay. Then comes the divergence. So divergence in the prices of these candles, it is normal, just 45, 46, not a problem. Then comes the momentum. Okay, now as of now momentum is neither supporting bulls nor supporting bears. So if you see here that through all of these technical indicators, moving averages, Ichimoku, Bollinger Bands, okay, market is bearish. Market is bearish, but through MACD and through stock RSI, okay, market looks bullish, but there is not enough momentum to call it a bull market. Anyway, so it is clear that market is clearly bearish. Okay, now let's reduce the expected movement of the market in the coming week. See, the 200-day moving average is around here, somewhere around here, which means that 4395 is going to play a very important role in the coming week. Okay, because if you see market is coming down, then it will hit this, the moving average, 200-day moving average, and our support of 4395, and then there are chances it is going to rebound. Okay, and so this is one possible scenario here. Okay, now another thing here, if you see, okay, other than this, the 200-day moving average, let me just write it down. It is 200-day moving average. Okay, it is 200-day moving average. Now the another possible scenario is that market may try to shoot up again, once again. Last week I told you that, see, this is the zone, and in order to be bullish, market must, means there must be two candles, two consecutive candles, but there was only this one candle, and this was the reason why market came down. Okay, so there was only one candle. If there would have been two candles, then for sure market was moving up. Okay, but anyways, there was this only one candle. Now if market moves up, then first it has to create two candles, two consecutive candles. Okay, these two consecutive candles, and if it fails to create two consecutive candles, again, see, this is again the zone. This is again, you can say, the danger, yes, the danger zone for the market. If market fails to create two consecutive candles, in that case it is not moving up. In that case it will be coming down. Okay, now one more thing, whenever these two consecutive candles, bull candles, are formed, which means yes, now market has potential to move up. Now in order to move up again, it has to cross this particular Ichimoku cloud. Okay, so when it crosses this Ichimoku cloud, okay, again, two consecutive days, two candles, okay, two candles. So when it crosses this Ichimoku cloud on two consecutive days, yes, then is the time, then we can comfortably say yes, the market is bullish, and now the market is going to hit 4,800 or 4,900. Okay, but until then, if the market remains below this Ichimoku cloud, or the market fails to create two consecutive bull candles here, in that case market is going to come down. So these are the two conditions here. Now there is one more condition here, okay, that we must not forget, is the 200-day moving average. Okay, this particular 200-day moving average. So like I told you, this is the 200-day moving average. Now if the market again comes, and if it closes below 200-day moving average, two consecutive candles, see this one time, okay, market, it managed to move up, means it managed to save itself. But now if for some reason, if it comes, okay, here, and if it closes below 200-day moving averages on two consecutive days, in this case, yes, there will be a confirmed correction. Okay, means the market will be further, it will be coming down. So this is what you should plan, okay, when you are going to trade in the S&P 500 index. So guys, I have given the link to my Discord spreadsheet. Whenever you are ready to join the group, okay, so just drop me an email. Okay guys, so this was my technical analysis for S&P 500 index for the week commencing from February 7th, 2022.